Hello and welcome. You're watching Business Today TV. I'm Sakshi, Batra, and this is Market Today, a show where we'll help you understand all the latest cues from the day street, starting from the benchmark index moves, the sectoral action, and the stocks that are in focus in today's trade. We'll also get you expert views to find out what exactly should be your investment strategy at a time when the markets are seen slipping sharply after 6 days of consecutive gains. Let's look at the benchmark indices. You'll see a 900-point fall on the Sensex right now. It's a sharp tank, and of course, 66,650, the current level for the Sensex, down by 1.4%. The Nifty, after coming very close, almost 170 points closer to its 20,000 mark, we've seen a sharp slip off, 240 points down in trade right now, 19,738. So what's the party pooper? It's the IT stocks led by Infosys that came out with the earnings yesterday. Sharp disappointment after the guidance has been lowered. So you can see the Nifty IT index down by 3.74% at the day's low level. And all the top market losers include stocks from the IT pack. Infosys down by 8% We did see the sharp reaction on the ADR stock, and after that on Infosys too. Tech Mahindra is down by 4.5%. Reliance Industries, ahead of its earnings, is also down by 3.5%. So the heavyweight counters really creating all that pressure. HCL Tech, HUL, Wipro, all of them down in trade. Let's welcome our guest on the show. Mr. Mandar Jamsandekar joins in. He's the director at Precision and he's a technical analyst right there. Welcome, sir, and thank you so much for taking the time out for this discussion. First up, explain to us the key factors that you have been able to fathom behind this sharp fall. Is it everything needs to be blamed on the Infosys results, or is there anything else to this fall that you're looking at?
Sakshi, good afternoon, and thank you for having me on your show. Basically, this fall, one need not be surprised about this fall. The reason is, if you look at the Nifty, so Infosys is the culprit today, no doubt about it. Plus, there are plenty of other index heavyweights which are down, and that is why the Nifty is down or the index is down right today. But even if you look at the way the markets have moved or the Nifty has moved, now in the last 3 weeks, we have seen Nifty move up from levels of 18,600, 650 to current highs of around 20,000. So that has been a very fast kind of a move. So at these levels, it's no longer, we no longer can say that you have stocks which are at available at a cheaper price. No, all stocks have participated in this kind of a rally, and this has been a broad-based kind of rally. So most of the stocks have participated. Now what has happened is earnings are taking the forefront. So based on the earnings, the expectations from earnings, and the way the companies are performing in these earning announcements that are coming out, the way based on that the market is reacting. So I think one need not be surprised, and it's also not the case that due to this fall we may be witnessing a deep kind of correction in the markets right now. So that also is not the view. Anyways, in case of IT stocks, already IT stocks were trading at resistance levels, and they were not showing that kind of steam that is required for those resistance to be broken. So I'm not surprised with the move that we are seeing. I think the Nifty can slide down another by 100, 150 points. So 19,600 is quite possible. But there's a good kind of support there. And going forward, also, this kind of move will continue. So we may see choppiness increasing as we move forward at current levels in the index, because it's very important for the index to consolidate after the fast kind of a move that it has witnessed.
Right. So I wanted to ask you, just until yesterday, we were dreaming of 20,000 coming in a day or two. So is that dream shattered, or do you think that still is a possibility?
No, Sakshi, that remains a target. So 20,600 is a target for the Nifty, but not immediately, maybe over the period of the next 1 month. So 3 to 4 weeks, that is quite possible. And it's not that today the market is down, therefore, again, maybe on Monday the market has to be down. No, that's not going to happen. So we're going to see movement in both directions. So one day may be a down day, the other day could be an up day. So that's going to continue.
Sure.
The speed from here onwards is going to be slow, is what I believe. But yes, 20,600 remains a target for the Nifty, and that should happen in the next 1 month.
Got that. So Mandar, should one really buy the dip on Infosys and the other IT stocks on Nifty IT as well, or is it still in a a scenario where one should stay away?
Sakshi, especially if we talk about IT stocks, as I said, most of the IT stocks are not showing the kind of strength that is required for them to move up or break past resistances that they have created for themselves in the last 6 months. So I won't be bullish about IT right now, but yes, around support levels. So say, for example, if we talk about Infosys, now Infosys has got a good kind of support between 1260 and 1220. So it comes around that level, then yes, one can surely buy, because I am also not expecting the IT stocks to break down below the recent lows that they have made. So that may not happen. So quite possible the recent lows that they have made would act as a good kind of support, and the recent highs would remain as a resistance. And for the next few months, these stocks may continue to trade between these levels. So if we have to talk about levels, then as I said, for Infosys, 1220, 1260 is a support upside, 1480, 1500 is a resistance. In case of TCS, this resistance comes in around levels of 3550, 3600, and the support is around 3200, 3150. So for each stock, it's different. But yes, these stocks are more or less range bound right now, and these levels should be respected going forward as well.
Understood. Moving away from the IT pack, let's shift focus to Reliance Industries that is slated to come out with its earnings in the evening today. Now, ahead of its earnings, we are seeing a dip coming in. Yesterday, we had a marquee event of Geo Financial Services demerger. The price discovery for the stock has happened, excluding of Geo Financials as well. How are you looking at Reliance Industries at 25.35? Your expectations ahead of the earnings, and what should be the investor strategy now?
Sakshi, see, in case of Reliance as well, so if you look at the way the stock in the last 2-3 months has traded, it's been a bullish kind of trend. So a no-brainer to a move straight from levels of 2100 or below 2100 to the current highs of 2650. Now, the prices that I'm talking about are adjusted prices to the demerger that has happened. So the current levels around 2600, 2650 is a major resistance for the stock. And this resistance, the price has been respecting this resistance for the last 1.5 to 2 years. So in the last 2 years, you have seen that every time that the price has come to these highs, it has fallen down to levels of 2200, 2150. So that may not happen now, but yes, the direction going forward would be dependent on the earnings that the company announces. So I would wait for the earnings to be announced, a level to be watched for people. So if somebody is wanting to get into a fresh trade in Reliance or a fresh buy in Reliance, then one needs to wait for a breakout about 2650. So that's a major resistance. So once that breaks, then yes, the bullish view would continue, or a fresh bullish view would be created in that case. So 2650 is a level which one needs to watch right now.
Understood. Let's also, shift focus to some of the other stocks that have reported the earnings, and the markets are also rewarding some of the stocks where their earnings have come out decent. So let's talk about from the auto pack, Ashok Leyland. Now the Q1 net profit here has soared about 247% to 576 odd crore rupees. This stock has inched up higher by 3.5% odd. Right now also trading around 3% odd or so at 181. Now, these are some of the stocks that most of the investors are always interested in looking, because they are just 3-digit stocks, less than 200 price stocks, so more affordable for investors out there. The auto pack has shown its recovery after the entire downturn in the COVID period. Ashok Leyland is one of the late movers right here. Your thoughts on the stock right now?
Sakshi, you've rightly put it forward. See, Ashok Leyland is surely looking bullish, no doubt about it. And Ashok Leyland at current price should be in one's portfolio, that is for sure, because this stock is starting a fresh move after a gap of 5-6 years. So for the last 5 years, the stock was facing resistance around levels of 167 and 169. So if you see the long-term chart, last time that it had been here around in 2018, the stock from these levels had fallen down to levels of 40. Now, recently also last year, when the stock had come to this level, it had again fallen down to levels of 130, 135. Yeah. So this band has been a major resistance for the stock and for the last 5 years. And this breakout happens after 5 years. So whenever this kind of a breakout happens, we call it as a multi-year, multi-top breakout. Yeah. And in this kind of a breakout, usually the price in the next 3 years becomes a multi-bagger. So I would be bullish on the stock if one has if one gets into a fresh trade in Ashok Leyland. The stop loss should be at around 160, 165. That should be the stop loss. And the upside potential in this stock with a 3-year view is double from here.
Got that. What about stocks like, Tanla Platforms? We did discuss the IT pack, but some of the stocks that are actually inching higher on the back of earnings. We are seeing a move of 3.5% odd right there, 1158. So slightly higher price stock, but Tanla Platforms, your thoughts on the stock and the charts? How are they looking?
Uh, Tanla also has witnessed a good kind of a move in the last 3-4 months. So from levels of 500, the stock has moved up to current levels of 1100. So it's already double in the last 3-4 months.
Yeah.
So therefore, at current levels, I think it will face a bit of resistance. Now, even if you look at the move today or the last few days, then it's been inching upwards. So it's not getting that kind of strength that is required for it to witness a sustained kind of a move. So for a fresh trade at current levels, I think it should be avoided. But yes, on corrections, maybe around levels of 1000 or below 1000, one can surely look at it.
Got that. One small ticket stock I'm going to be discussing, since that has been in the on the move recently, and I'm talking about Suzlon. This is one stock which has been extremely volatile, a huge wealth destructor for a long time. Historically, very, very different kind of charts that we have seen. But in the last 6 months odd or so, 100% move on the stock. Of course, some of the investors who had been holding this for long, hoping for some price revisions, they are clearly happy right now. Are you tracking this stock at all? 19.6. How do you look at Suzlon?
Sakshi, a level of 16 rupees was a resistance for the stock. So basically, what had happened was, since the stock had fallen down to those levels of 2 rupees and 4 rupees, every time that the stock tried to move up, there's plenty of resistance. So there are plenty of people who are stuck in this stock at higher levels. So there's continuously selling pressure which was coming in. So till the levels of 12 rupees, the stock witnessed plenty of selling pressure. So every time it moved up, every move that you see, it's a sharp up move. And if you see the fall that happened after it is also an equal and opposite reaction. So this is the first time that once the stock broke past levels of 12 and the next resistance at 16, the stock is now witnessing a strong kind of buying that is happening. At least it is not witnessing the selling that was being witnessed till the level of 12. So that's a positive that I would say. Until the time it trades above levels of 16, there are chances that the stock would head higher for the next resistance levels, which are around levels of 22 and the next level around 28.30. So that is quite possible. So if one has a long position in this stock, should have a stop loss at around 15.5 rupees. So 15.5 should be a stop loss. And one can hold 22 is a level where one needs to review whether the stock will continue its up move or there should be profit booking that should be done.
Got that. Mandar, your own sense of the kind of sectors and themes that you'd be bullish on right now, anything that is looking technically very positive to you that you could share?
Sakshi, there are plenty of stocks. So as I said, it's a broad-based rally. Now, if we talk about stocks like REITs, so I'll just explain you the formation that the chart has been doing. See, for the last around 10 to 11 months, the stock was facing resistance around levels of 430. And today, the stock has broken past this resistance. It's trading amazing kind of volumes today. So if you compare the last few days, the volumes are very strong. Currently trades at around levels of 446. This suggests that yes, it's starting a fresh kind of an up move. And in case the stock continues this move upwards, should be able to aim for levels of 560 in the next few months. So if you ask me for a reco, then rights would be a buy in this case with a stop loss at 429, upside target of 560. Along with rights, there are other stocks as well, like for example, IRFC, which is showing strong kind of volumes, has broken past resistance at around levels of 34, upside to levels of 37.40 quite possible. So a 10% kind of an upside is possible. Then you can see IRCON. IRCON has broken past resistances which were there around levels of 90, 92. Currently trades at around 93, 85. Has an upside till levels of 110, 113. So that also, from a short-term point of view, is a buy with a stop loss at 90 rupees for an upside target of 113. So other than this, then there are banks which are looking good. For example, SBI. SBI facing resistance around levels of 600 for the last 2-3 months, and this is broken yesterday itself. I'm bullish on SBI with a stop loss at 590 for an upside target of 650. That also should happen in the next 2 to 3 weeks.
Okay.
So along with SBI, in PSU banks, there's Canara Bank, which is looking good. PNB Bank has been trading strong. In private banks, IndusInd Bank and ICICI Bank are looking good. So ICICI Bank is down today, but yes, in this correction, surely looks like a good bet to go long. So there are plenty of stocks, Sakshi. Even in auto, for example, auto ancillaries, Banco India is looking good. Motherson is looking good from an investment point of view. From a short-term trading point of view, Ucal Fuel is a stock which is looking good. Today has broken past resistance around levels of 144 and 145. Quite possibly should move to levels of 150, 155. So from an intraday view plus a positional point of view, Ucal Fuel is looking good with a stop loss at 141. One can surely go long. So there are plenty of stocks in that way, yeah.
Understood. ITC is what I wanted to discuss with you before we wrap this show, and that is a stock that has shown remarkable move, not just in the recent past, but over the last 1.5 years. 491 currently for this stock. Of course, fresh highs coming in, and 6 lakh crore kinds of a market cap. Your own thoughts on ITC? Is it still a buy despite the kind of remarkable move that it has already displayed at 491? Should one take a pick?
Sakshi, no. That's a straight answer. No. For a fresh entry, it's an avoid right now, because if you look at the long-term chart from the move which started, so we're not going back to COVID times, but at least the recent move from Jan of 2022, from levels of 220 to current highs of 490. That's been a phenomenal move. And basically, see, what happens is the market works on expectations. So the market right now, or ITC right now, is up because as we all know, there's a demerger announcement which is expected, and that is what been expected. So the price is up because of that, and I don't think this is a level where one needs to get into a fresh trade. And if somebody is holding, I would suggest to do at least partial profit booking. Take some profit at these levels. Yes, you can surely hold the rest of the quantity, but yes, at least take some profits at these levels would be an advice.
All right. Well, many thanks, Mandar, for being with us on the show and sharing these wonderful insights with all our viewers. Pleasure having you with us on Business Today TV, and many more interactions to follow going forward as well. The market's still down in trade, 850, so they are taking a pause after 6 straight sessions of fresh record highs being seen on the index level. IT, the clear culprit right now, but it could be, a red Friday that we may see towards the closing of the session, but still 2.5 hours remaining. So we will continue to watch out for, because this is markets and anything can happen. So continue to watch out for all the signs and signals that may indicate what the next week for you will look like. Meanwhile, despite the benchmark index moves, several of stock picks that have been discussed, those are the picks that you can focus on in your stock selection when you're making your own portfolio in the markets. To track every momentum on the markets, you can continue to be with us on Business Today TV. Don't forget to subscribe to this channel, and also continue to engage with us on other social media platforms like Facebook, Twitter, LinkedIn and Instagram. Until then, many thanks for tuning in.